14% rally today, June 8, on IGT, International Game Technology. In this video, we're going to review and follow up on our April 21 unusual options analysis that predicted this, and also analyze the unusual options that happened today that were very unusual because they were also 10,000. So without further ado, let's get right to it. So April 21, the video we made, this was about 47 days ago. It was these 10,000 options. The long option was expiring in July, and the short option was May 19, which is this day. So since on this day it was less than the strike price of 30, they were able to keep the entire credit. This was the trade here. If you want to take a look at it again, we'll put a link at the top of this if you have info cards turned on, and also at the end of the video, the IGT video. And if you look at it now, since this is expiring already, May 19, we can't get a price for this, but we can still look at the July 21s. We know that they were able to keep the entire credit for the 30 strike calls because they sold that, so that was $78. For the July 21s, that was $115 or $1.15. And so you'll see here, currently the value is 185 to 192, so somewhere in between. So let's say, since we are also in this position as well, you could essentially sell it for $185. So the 185 subtracted by the 115 of the initial investment, that's a $70 profit. So you divide that with the initial 115. Well, actually, it's not just that. We actually have to add the credit, because if you recall, they also got 78. Well, we also got it too. So because it's already expired, we can't go look back at it. So it's actually 70 plus $78, and then divided by the 115 of the initial investment on the long call. So it's actually currently at about 128%. And so that's quite good for this trade. And then we can take a look at the unusual options today. You'll see happening here at 10:01, 10,000 of them. This one is July 21, 33 strike calls, and October's 34 strike calls. So let's take a look at the 21 strike. Here it is, 43 days away. You'll see these 10,000 here. And you'll also see the 10,000 that we had shared with everyone on April 21. They're right here, still open. And so this 33 strike here is also open, because you'll see here this is greater than this 62. Okay. And when we look at the October's 34 strikes, right, this is expiring 134 days away. You'll also see here 10,000, much greater than the 56 here for the 34 strikes, right? So what is going on here? Well, what we think is going on here is that they're selling this 34 strike calls, okay? And then they're buying the July 21s, the 33 strike calls. And what is this when we analyze this trade? Let's take a look at it. This is also a diagonal trade. However, it's slightly different, because you'll see here that the Greeks, this is a negative delta, negative 3.97, so it's slightly bearish, right? And there's a negative vega, so, and also, if we look at it, here, if the price actually rallies even more, they'll be profitable because their break even is actually over here on the upside, and on the low end, it's this right here. We're currently trading at $31.50. So as long as the price can come either below $30 or above this level here on the x-axis, $35.5, then this trade will be profitable. The only time this will be at a loss is if it stays in this range. This is known as the death valley. This is where the loss of this trade can incur between $30 and $35 at by expiration. You'll see this purple line will actually start to increase and become that blue line because there's a negative theta decay. So it starts to decay in value. So you'll have more losses here. This here on the y-axis is your loss if it goes down and if it's up. So you'll see here that this point at the low end here, this like a ditch in a deep end here, all the way is the lowest you could lose. So this is the max loss here, the lowest point of this curve here. So that's the max loss of this trade. And so when we look at this trade, you actually collect a credit immediately by doing this trade. So this is the trade, and it makes sense because we have this very strong rally, and then could this continue to rally is very likely, or it could also drop and test this gap here. If it does, it would drop back down. But what they're saying here is like this is either going to come back down this $30 level, or it's going to go a lot higher. So past that $35, right? The $35 is pretty high up here, up in this range. Okay. And if we kind of look back at this stock, maybe look back at 3 years to see it had, this was its high at $32. So we are near a high, and just about $1 away, $1.50 away, and we will be at testing its 3-year high. So keep that in mind as well. And so that is our current analysis of IGT. If you are interested in our trades for IGT or other stocks, we have a membership program you can join on our channel homepage. Click the join button to learn more. And we share other stocks as well, and then also our trades and our analysis, not just for 1 or 2 stocks, but multiple stocks where we feel are more confident in this now unusual options activity in predicting these stock movements. You can trade stocks based on unusual options activity or options. You have multiple ways. So learn more by clicking the join button on our channel, and subscribe if you haven't. Click the bell icon. You'll be notified whenever we detect unusual options activity. And please smash that like button, and take care, everybody.